it has been long time that we are waiting this button here, guys. And this button, it is called raising wedge button. What does raising wedge mean? And specifically, it is bearish raising wedge. So it is bearish raising wedge. Bearish raising wedge. Okay. So what does the bearish raising wedge mean? It is a button if it's breaking the below trend line that will significantly move the price in the down direction. So we have been waiting this reversal button long time back. However, this button, if it is succeeding and breaking the level of 1925.500 or the 1922.350, if we break these two level down and close below it on 4-hour time frame or on the daily basis, we're gonna go to have a continuation movement for the gold down. So what has happened to push the price up? So basically, if you look to the GDP data today, that is about the productivity of the US. Okay, so this GDP is the productivity of the US. This is the domestic, the goods or the goods domestic product. So this is the domestic product of the US. So this is what US manufacturing and producing, whether it's services or goods or products. Okay, so engine, aircraft, cars, mobiles, food, services, healthcare, and so on. So we were expecting to see a negative data here. Negative data. That means this green 2.9 was supposed to be red and below this number because the Federal Reserve Bank is working on this for a long time back. However, in the past uh, 2 quarters, or in the past, uh, in the past 2 quarters, we have had 2 quarters where we have had negative GDP. So it was minus 1.4% and it was minus 9%. So when we say negative GDP, that's supposed to be negative from the previous one. Okay. So now this time the GDP has raised up. If the GDP has raised up, that means still the economy is overheating and they need to increase the interest rate more so they can reduce or downgrade the economy. They want, basically, the Federal Reserve Bank, they want the economy to go down. So to make that economy to go down, okay, to the downside, they need to make sure that they raise interest rate, then the value of the dollar become more expensive. When the value of the dollar become more expensive, then people they are uh, then the products will become cheap comparatively because the value of the dollar become expensive, the product itself become cheap. Why? Because if $1 is able to purchase, let's say, a cone of ice cream, now if we increase the value of the dollar, then the dollar now is able to purchase, $1 is able to purchase 2 cones of ice cream. So the product is becoming cheap and the value of the dollar is becoming expensive. So when we raise the interest rate, the value of the dollar become expensive, then the gold become cheap because the gold is metal, is a product. So when we raise the value of the dollar, the gold will become cheap. That is one. Second thing, if you look to the data as well, you can see that advanced GDP also is already above the expectation. And you can see that unemployment rate has been reduced. It's a green. That means there are more people has been employed, and this is above the expectation. So you can see a growth on the employment, a growth on the GDP, and a growth on the home sales as well. So people still they are purchasing homes, they are purchasing apartments. So that means that the money still exists in the market in US economy, and that means spending is still happening. So for that purpose, the central bank he might increase the interest rate again to increase the value of the dollar again and to reduce the power of the purchase. All right. So based on the analysis, economic data, the dollar has to go down. The gold has to go down. Based on the analysis of this data, the gold has to go down. Okay. Technically, when you look technically, the traders and the institution, they are always waiting a support level to be broken out or resistance level to be broken out. If we speak about resistance level to be broken out and continuation for the uptrend, that is almost like very hard, very difficult. Why very hard and very difficult? Because the price is already too much extended. Too much extended. So if the price is too much extended, the normal thing to happen is to have correction. Sorry, guys. The normal thing to happen is to have price up, then correction, then again continuation up. We cannot have a price going for long time like this. We cannot have a line like this. Okay, we have to have correction. So if you look here to the history, whenever the price is moving here, it is always correcting. It is always correcting. So now, if you compare this history, and if you compare this, you see swing low, high, swing low, high, swing low, then high. If you compare this with the history, you will find that this movement is abnormal. This movement is abnormal, and this is manipulation from the bankers and from the institutions because they want people to buy the gold. The moment me and you we put buy, then we are having all buy. Then what they will do, they will remove their buy and they will enter sell. So when they load sell, market will crash down and you will be hitting stop losses for the buy. So this is what we supposed to look for. So for me, in my opinion, and this is my personal opinion, and however, you just if you're gonna go to trade, don't take this advice as I am pushing you for a trade for sell. No, I'm just giving you an opinion, and I'm just telling you what is going to happen if this button break out. So far, it didn't break. It didn't do that. However, we might have a breakout, significant breakout. Now, what we are going to do here, the moment we reach 1925, we're gonna go to enter buy from here. However, the moment we enter buy, we're gonna go to put our stop loss on 2022.35. So that is the area where we need to keep our eye on it, and I believe this is will push the price up a bit. However, if we have pushed it up, we might have a correction, then breakout and continuation. So these buttons suggest the downstream or the selling direction. All right. That's why I always sell the high and I always keep a small position from the top and I want to keep that position because I am targeting for $100 movement down or $60 movement down. That is a long term trade and that is what I always say for you guys. You have one position from the top and keep it. Don't close it. Zero one. Keep it. Don't close it. Put B and let it hit B. There will be one signal where this button will break down and you will not be able to catch the gold while it's going down. That is what I want to emphasize and that is what I want to share with you guys, and hopefully this is fully understood. If you have any question, please raise it to us and I will be sharing this video on the YouTube channel and I will give it to you guys. Thank you very much for watching this.